Sure, your guys' works in video.
Good morning, guys. Ken at Tortoise Capital. This is small group coaching cohort 3,
Yep.
January 12th, 2025. Welcome, everybody. Let's see what we got going on here. I ended up getting up about 3 hours ago. I was dreaming about AI prompting. That's how sad my life is. So I got to get this idea out of my head. So I've got about 20 prompts they call super prompts that are layered procedural queries that are iterative, and the AI uses that to steer me towards something. Like I'll ask it a question, it'll ask refining questions and keep going. So I realized what I need to do this morning is to enumerate those 20, let's say the top 20, run them back through the AI and say, take a look at this prompt and summarize for me in a sentence or two what it is best suited for. What kind of problems does this thing work on? Who should use it? And then stack all those in a lookup file. And then write another prompt which says, all right, tell me what you want to work on. And then use that to steer people towards the best prompt to then accelerate their move. Because what I've done is I've taken all the prompts that I got from Claude and Koala and ported them over into shared workspaces for the Army. Because for Army AI, we have to use an Army tool on an Army network to talk about Army information. There's a security concern. So I can share, it turns out I can share that space with anybody in the Army. So I got all my students using that and all our faculty. And then when they leave the college in the summer, they're able to take those shared workspaces with them. So I am essentially writing super prompts for all the Army, which is kind of a staggering thought. I'm working with the guys who are building that tool for the Army. It's still in just not quite full production, but it's still pretty good. So I realized that that's what I needed to do this morning because I'd already moved all the prompts over. I can share the prompts. But if you didn't know, you'd have to monkey your way through all 20 to see what's going on. So the iterative prompt will turn out to be not only a really good prompt, but it'll raise prompting to another level where it has it's a procedural thing as well as an assistant. So I got to do that this morning. The next thing I got to do is I got a workstation coming in on Tuesday for the AI 2025 thing. And what I realized I got to do is I got to take advantage of that Koala writer's article writing, the bulk article writer, because I broke the code on how to write books with that in a day. Take a complex topic, volatility. All right, give me 20 one-line sentences with a penetrating insight about volatility. Say something about volatility. Now, for each one of those sentences, in parentheses, put 10 keywords that are SEO optimized for that. That would, when you put all that in one sentence, you can give that to a bulk writer and it'll write an article for you. It'll do some research, and the Koala writer will also search all current information with Google and Google Scholar and Amazon Trends and all that shit, and then rewrite the article for you nicely. So it's not limited by the training set that the large language model was in. Uh, well, you can then say, let me take those 20 and write an outline for this 3,000 word article that is tailored to the content that I want each article to have. Standard outline. I want you to have definitions, procedures, foundational thinkers, specific references that are downloadable, verify that they're downloadable, connections to other thinkers and concepts, use cases, practical applications, successful end state, all that shit. You say, and then you say, and then add anything else to that outline that you think would be appropriate based on how I got you started. So it generates a standard outline for you. You then take the 20 topics and you have the outline that you like, and you say, that actually looks pretty good. Now give me another 30 that do not duplicate that topic sentence. So 50. So now you got 50 chapters essentially. And then you say, you go to the bulk writer, you drop the 50 one-liners in there plus the outline, and in the background, that thing will be writing 50 3,000 word articles with and it'll cross-reference. So now what you do is you take all of that and you put it into a RAG, let's see, RAG, a reply augmented response augmented generator. So what that does is acts as a local expert knowledge base that ensures that you stay on the gold. Because otherwise, if you just ask a large language model that was trained generically, it could be filled with a bunch of dumb fuckery, you know. So the local RAG turns out to be the way that you can ensure a higher quality response to reduce hallucinations. So what I just realized this morning as I was thinking my way through that was, oh shit, I've written 20 books in the last 3 months and I get 2.5 million words a month in my bulk writer account. And I should be establishing an ever growing meta search on that. You know, the well, it started off as a bunch of little owl notes. Like I went through the 200 most influential books that I've ever read and asked for an executive summary of each one of them and all the key points and all that, plus 10 other books that I ought to read if I was interested in that book. And so now I've got about 1,000 book reviews of things that are pretty goddamn interesting. So I just figured out this morning in my little dream state that that's what I need to be doing, is creating this an Oracle RAG that I can use to generally answer questions in the way that I would answer questions on my best day. Like if I've identified all the things that ever influenced me and made sense to me, and I wished I could remember, as I remember, I'm just generate executive summaries and actionable insights from them and keep dumping them into this RAG. I will be continually updating my recall and then put a front end on that just to start asking questions. So I gotta do that. That's my next step on that little process. Good. I got it out of my head. Now I have to do it. All right. All right. Hey, good to see everybody. Everything's good here. We've survived our snowstorm and the ice storm. So it was interesting working from home all week again. 3 years ago, it was routine because of the COVID or whenever that was. And now it's had to remember how to do all that distance learning and distance work with the guys. But good times. So let's go ahead and get started with a quick introductions. Matt, if you want to kind of lead us off and You're our new guy. We're going to keep us on our best behavior and motivate us to do well.
Hey,
Good,
thanks a
good to
lot,
meet you.
Ken.
Yep.
Good to meet you finally, and thank you for the opportunity. It's an honor to be in this group. And so I'm Matthew Mickey, and just a little bit about me. I've been married for 20 years. I have a 13-year-old daughter who's keeping me on my best behavior, even though some days I don't want to be. I have two awesome English bulldogs who are 5. I joined the Army the day after 9/11 and did 20 years. Part of it as a 19 Delta Cavalry Scout, and then the rest of it as an infantry soldier. During that time, I did the Iraq, Afghanistan deployments, and did like almost every single position at the company level, all the way from being a private all the way up to a company commander. Served as a first sergeant and everything in between. Right. During the time on my enlisted side, I went on and got my bachelor's degree, working in between deployments at night, whatever it took, right? It took me 13 years to get my bachelor's degree. And then I went and got, while I was getting selected for the Sergeant Major's Academy, right? And again, looked at for that board, I got a clever idea that, hey, guess what? You're not going to be in the Army your whole life. And I had good first sergeants who were peers and mentoring me at the time. And they were telling me what mistakes they made. And I make sure you don't make these mistakes. And it just hit me that, I was a young E8 because I got promoted early. Part of it was, because of my work ethic. Part of it was because people died that were above me during my deployments, and I was the next one in the chute. So it made me advance a little bit quicker in my Army career. So I decided to, apply for this program called the Green to Gold program, which essentially will let you go to any school for 2 years and finish your bachelor's or get your master's. So I went on and applied for that to get my master's from U of SC. And so I did that. I got accepted the same month for the Green to Gold to be a second lieutenant or to be a sergeant major. So I had to make the choice. So it was a very fun conversation to have with my sergeant major when I told him I'd rather be a second lieutenant than a sergeant major. But strategically, I was thinking about the life outside of the Army, what I wanted to do, and that was my master's, right? I needed to get a master's. I got my master's in public admin with an emphasis in statistics, right? Which is why everything that I talk about trading related will always have some kind of database approach and statistical approach to it, right? And then like what got me into the investing and trading world? Well, it's kind of a crude story, so I apologize in advance. But after every deployment, I'd bring my guys in because there were no females in combat arms roles back there. Before we deployed back home, I'd tell them like, listen, you just saved up 5,000, 10,000, 15, whatever the amount was, because you couldn't spend it on anything besides tobacco and energy drinks overseas. I'd tell them like, be smart with this time, invest it, save it, pay off bills. Don't buy cars you can't afford 6 months from now, or blow it on, alcohol and late nights, right? Be smart. And then we'd return home, and literally 3 months from now, from returning from home, I've noticed nicer cars than mine showing up in the parking lot, and my brand new private, he doesn't pay anything, wearing the newest Michael Jordan shoes. And so I'd bring all my boys in again and be like, you guys were fucktards. I told you not to be fucktards, right? How many of you guys invested saving it? Blah, blah, blah. And like one of my soldiers would raise their hand, and I'd be like, wow, that's awesome. I had no idea what they were doing. What company did you invested in? And they would spit off what is known as the CNBC special of the day, right? And as I was reviewing my private's monthly budgets every day, I would always pay close attention to that one soldier who invested, and I watched their money just get drained. They would have been better off blowing it on a trip to Las Vegas, right? And so that set me down the wrong path. Like that was very uneasy with me. So I started like reaching out back in the day. It was like look it up on the yellow books, look it up on MySpace at the time, whatever social media, internet. So I would start reaching out to hedge fund managers and anybody and everybody. Teach me how so I can teach them. I'm not going to pay you $20,000 for a 4-day seminar. I don't even have that kind of money. I just want to teach my soldiers to like be smart with their money. And like a lot of them wouldn't, but a couple of them would. And so during my off time, I would like sit there and learn from these professionals, money market managers, all kinds of stuff. And I did that for the rest of my 12 years, right, in the military. And so when I got my master's, right, I just knew that like this market at the time, this market is so freaking random and so confusing that like there's discretionary and there's objectivity, right? You're discretionary, which is subjective, or you have objective facts, right? And if I was going to teach people and do it myself, how to do this trading game, right? It would have to be from an objective, scalable, sustainable system, right? And then when I retired and, I got accepted to, Bank of America's military program, and I knew all I wanted to be is surrounded by markets. So my first year, like when the T+1 life cycle of a trade clearance and settlement process was being built, I was part of that team. I wasn't nothing special, but I was the dude that pulled in Goldman Sachs stuff, Citadel stuff, BlackRock stuff, our stuff, talked with the Fed Reserve, the FedWire desk, talked with the DTCC, and I reviewed all these slides because I was the proofreader of slides, and I just knew to pay attention. And I just knew like one of my mentors, he's a big time old trader on the desk and blah blah blah. He told me, he's like, listen, if you can be a good janitor, you can be a CEO. If you truly take pride in being a good janitor, you'll make it to the CEO level. And of course, I took that like with serious pride, right? Because I learned that through the military, right? Do the shitty jobs, whether you want to do them or not, to your best ability, and people will recognize that. And I did that, right? And I did it so well that 6 months into it, right, I got moved over to collateral and margin, right? And I got my own client range, right? And basically, I was the dude that would like, if Goldman Sachs put on a trade for 10,000 shares of Apple, I was the guy making sure there was no exposed risk. So I'd margin call them, give me cash or treasuries. And then I'll take that cash and treasuries and swap it for a low yield as it went through that 48-hour period, right? So we could collect a yield from it and then give it back to them once the 10,000 shares was cleared and settled and put in the filing cabinet, right? And so I did that for about a year and a half. And now I just moved over to business controls for AML, right? Because I'm slowly working myself out of investment banking. Why? Like I did 20 years in the Army and, I'm very appreciative of what the Army gave me, but it took a lot of family time away from me. My daughter's 13. She's going to be out of this house in 5 years going to university. And, like I'm working 18-hour days, right? Like, so I've got to start balancing my work-life balance at some point, or I'm going to be singing the cats and the cradles by the end of it, right? And so from a personal approach, I like how you talked about AI. I get to see all the AI influx and all these um all these companies because I work with a little bit of everybody, right? When you're investment banking, you get your hands in every single company that has to do with anything, right? So I see how they're doing the same thing. They're shoving data in AI, they're scalping it, they're asking it questions, they're developing their little AI piece. Obviously, a lot of the stuff they do is proprietary, but they still talk about it, right, on weekly calls and just when you're shooting the shit on these Zoom calls, right? And so I'm actually applying that to mine. I take data sets. I get my prompts from ChatGPT because it tends to be better at building prompts on ChatGPT, and then I feed it in, then I store data into Claude, and then feed it the prompt and where I want it to think and how I want it to think, and then I just ask it questions about the data, and then control the conversation, double check the results, control the conversation. So yeah, when it comes to how I trade, like that's going to take me about 10 minutes to explain it. I don't know if this is the time and place, but I'm going to stop it right there. Nice to meet all of you guys. I'm a talker.
Awesome. Appreciate your service. And I'd echo what you said about from the bottoms up. I was only enlisted for 4 years. I was a truck driver, made E5. First sergeant sent me to OCS or get out of the army, basically. So I hadn't planned on making a career, but you suddenly wake up. Now I'm in my 45th year of serving. I did 25, retired. Now I'm in my 20th year of teaching here at Fort Leavenworth. So yeah, it's
And that's
unusual to make a choice between second lieutenant and
Sergeant Major.
sergeant major. That's an unusual one. I don't know if I ever
Well, I'm actually
run
like
across
looking to
that one.
get back into developing
Yeah,
teams and soldiers, and I was
yeah,
thinking about maybe doing JRTC or something like that, just so I can get that mentorship role back. Is like corporate's not for me. Let's just put it there.
yeah,
I need like to do something like what you're doing is like you're tying in your life skills with your past experiences. Like
Yeah.
I'm trying to find something like that as well. So I was like
Well,
looking at
I
your
just
RTC and they're like,
as a way to think about that, as you think about your long term fitness too. So I'm on the board of our local soccer association, and I was coaching my kids uh, from age 6 and 7 all the way up through till they went off to college, coaching soccer, and then just stayed with it. So I have implemented like a little leadership academy in the summertime, sort of running a summer camp and make it free to the kids, and use my older players to coach the younger players. And really, you spend more time coaching families than you do the players, because the parents are the, I'm not going to say the parents are the problem, but the parents are the problem.
yeah.
They're the opportunity. So
Mm,
there are ways in which that you can start stacking up all the things that you want to do, and it's very satisfying after a career of traveling all the time and always being, you know, the temporary guy, to be able to plant roots and participate in a community and spend the time with your kids when you can, and the other kids. And so that's a way to start to reconnect with that sort of that service ethic that you feel.
mm.
There are ways to express that. It's harder to do that in corporate.
No,
Um,
it's impossible.
we're approximating something like that in the idea of the tortoise community of practice has a certain flavor of that, in a voluntary sense. So there's opportunities to do that here. I teach in a uh, doctor of education program and a couple master's programs where I get a chance to talk to future leaders, and so there's sort of a professional educator connection there for me too. So I try to line up the things that I do where I'm teaching at the military college, at the local Catholic university in that Ed D program, the business, and then the soccer environment. Uh, if you get leverage that way, and so whatever your core values are, you find things that allow you to express that, and then you start getting some integration in that way. It turns out that Army stories are great for talking to traders and talking to
Oh gosh, yeah.
educators and talking to educators, and
Mm.
talking to traders and educators is a great way to talk to Army guys too. The crosstalk uh,
That's what I do.
really
Like
leverages. Yeah,
the one thing that I can do, and which I do right now, is like you could only imagine the scammy fish oil, snake oil salespeople that target working class retail to how to trade.
yeah,
And so what I do is I have 50 traders that I meet with every morning at 5:30, and we talk statistics, and I teach them how to read statistics and
yeah.
how to put an objective edge, and then we just sit there and back test different studies together, and we do our little daily mapping. We don't talk like I place this trade or that trade because it's a learning opportunity, but
Right,
I'm kind of the leader of all that. And, like a lot of it, they know they show up at 5:30. Guess what? It's early. Who cares? Like you either show up at 5:30 or and be disciplined and
yeah,
take the best approach for your trading day, or you just go on with the win. So I'm able to
yeah,
lead that, but that's from 5:30 to 6:30. And like that does wonders for your mind too. Because like you probably experienced this depending on your transition. Like you went from 20 years of always being around this camaraderie and this team building and exercising and this, embrace this suck environment together as a team to corporate America where everybody's
yeah,
stabbing you in the back left and right and you're hanging out with these Ivy Leaguers, but they're 21-year-old Ivy Leaguers with a lick of real
yeah,
common sense.
yeah,
And like it's just like for me, it's just not my I gave it 3 years and I liked it for what I liked it for. And then now it's just like I'm 40 now and it's like, what's really important to you? And like you get at the end of the day, in 40 years, we're all going to be dead or on a deathbed. Are you really living the legacy that you want
yeah,
to leave behind?
yeah. That's why I think you got to make what you're doing with those guys in the morning is your step in that direction of constructing your own reality and your own your environment to express the values that you want. You know, the pick your big five, the five things that you want to be known for when they've buried you and when your daughter's looking down on you. What do you want her to say about you? Well, what I want my wife and kids to say about me is that he was a good father, he was a good husband, he was a good teacher, a good student, and he was a warrior on behalf of the people for those that did not have a voice. And if it's not one of those five, if something I'm doing is not one of those five things, don't do it.
I love that.
If it's not worth doing, it's not worth doing at all, you know. And it took a heart attack for me really to realize how important it is to let go of all the things that actually don't matter at all. I was uh, living way too much with the satisfaction of how much I didn't care about some of these other things. And let me tell you about how much I don't care about it. It's, you know, so it was getting into my head, and I was worrying about shit like that too. So um, that's what I would say is the you got to construct that reality, a life of intentional living towards your top five values, your big five for life. Figure out what those five are. For some people, it's accomplishing certain things. For me, it turned out to be five states of being or five roles to play. And, you know, I trust my wife to make me a better husband, my kids to make me a better father. Students will judge me as a teacher. My teachers will judge me as a student. And on behalf of the people that need protecting, they'll judge whether or not I stood up for them when it got tough. So if it's not one of those five things, I don't do it. Um, yeah, for me, the transition was easy because as I was retiring, they were trying to hire civilian faculty at the college. So it was, as you know, it's at these times, it's very hard to let go of active duty because you don't feel honorable by standing down. And that was it. But I had to. It was time, and it was a way for me to continue to serve. And every year, I ask the students basically, should I still be teaching here in the military college? And if they say yes, then I stay on. And so they keep saying yes, so I can't leave that. So
Yeah, I like what you said there. I'd probably still be in. I've got 8 concussions, been blown up 6 times. I got nothing but metal rods holding my leg together. So I
yeah,
kind of got forced out with the new
yeah,
PT test. And because I've got neck surgery, back surgery, metal leg. And so it was
yeah,
like they said they tried to get me out at year 19. I was like, whoa, whoa, like we're
yeah,
gonna make it to year 20.
yeah, yeah. Yeah. So anyway, that's where I would steer you towards is figuring out
I
how
love
to
that.
use leverage on your time to start stacking and building the things that you want in your life, as opposed to going to look for them, pull them into your life in a way that fits your time, particularly the time with your with family. Irreplaceable. Can't ever get that back. So
And
anyway,
that's one of the main reasons I'm kind of stepping away from corporate America because like I'm
yeah,
not joking. Like in
yeah,
Hamid said his brother works investment banking and is already complaining. Well, that's because it's a young man's game. Like I'm my peers are 23, 27-year olds from Ivy League schools. Of course, they're fresh in their career and I'm just the old, diesel engine. And it's
yeah,
like, yeah, I can do it, but like every day my daughter gets closer to college is less of a day that I get to influence her decisions and
yeah,
molding her into an
yep.
adult.
I'm with you on that. All right. Hamad, good morning. Give me your check in real quick.
Morning. Yeah, all's good. I think I picked up a cold this weekend, but yeah, all is good. Been running some research on the AI and all of that I'm going to share with you guys. So yeah, but things are running smoothly.
Shi Weng Chong. Good morning, sir.
Morning. Yeah, nice to meet you, Matthew. So, yeah, everything is good for me too. Yeah, nothing special. Yeah, thank you.
Awesome. Kyun, good to see you, sir. Good
Yeah,
afternoon over there.
yeah, we were having that cold spell that you had. We had snow the other day for about 15 minutes. Nothing, nothing special, but it's kind of big deal for London, I guess. But everything good. Just this last 2 weeks was really trying that that RASK thing, which I will share a bit of feedback on. It's some of it, parts of it work, some parts of it doesn't work so well for me. But anyway, we'll share that. But all good otherwise. So
Yep. Yeah, before I forget, I did send a note out to everybody through the course. Pay attention to cohort 4, like the last 3 or 4 sessions that they've done. Eric Moe, dude, is crushing it. He's got 13 symbols that you would expect that are least correlated, very liquid, enough volatility that they trade both on intraday and short-term swing. And so he's getting all the signals that he needs. And he's hitting it at a 3-to-1 win rate and a 3-to-1 payoff rate, which is impossible, right? You can't do that. But yeah, 3-to-1 win rate, 3-to-1 payoff rate. He's been live trading at production level for 17 days. He's got 17 winning days, average 5R a day. He's a freaking machine. Next week, he's going to talk about the one belief that he changed that made that possible. So I would start with it, go back about 4 sessions and kind of fast track through that. There were some important ideas in there about, I've been on this kick lately about the rule of 4 for simplified framing and simplified exiting, which comes from the keep percentage. Just a quick summary for the record. Every chart pattern that you use or every rule that you develop is designed based on your ideas of how to improve the call. When do I take the step? When do I act? When's the right time? And the more detailed you get on that, the harder it is to move away from it later. You start researching in and around that, trying to tweak and observe it. The important reframing on that is always keep in mind the briefing to your supervisor about your trade. Like, they don't got all day. There's only 2 questions that they care about. The first one is, for that trade, what was the maximum favorable excursion? What was the most we ever had on our side of the ledger? And the second question is, how much of that did you keep? All right. The losing trades is easy. That's it. They don't even want to know about that because they can see that by the left-hand side of your histogram. If you ever take a loss greater than 1R, then we're going to have words. You estimated a reasonable, manageable risk that you were going to be strict in adhering to. And on the basis of that 1R, we can define the size of the position that we can take as a percentage of our portfolio exposure for that plan, for that iteration. So all of that is geared, that all the math of that is geared to, can I actually keep my losses at 1R or less, preferably less? Because what I'm going to do on my estimate of risk is give myself a cushion to account for Murphy and slippage and whatnot. So I've got to have a signal that then lets me take action, and then the result of that action, all of that should be less than 1R. If I can do that 100 times in a row, then I'm entitled to say, perhaps I'm able to estimate and then manage to that level of risk. And on the basis of that, I can decide how many dollars to risk going forward. I can use that amount of risk that I'm taking as a way to compare it now to the estimate of reasonable reward. If I have reasons to believe that in the time frame that I'm going to be active, I can achieve 2 levels of risk, 2 levels of reward to my 1 level of risk. Now I can start using those estimates to determine if I'm being professional in the way that I evaluate the opportunity. If my losses are never greater than 1R, and my rewards are somewhere between 1 and 2, if 85% of my rewards are between 1 and 2, then I can say that provisionally, humbly, I seem to have the ability to find opportunities where the risk to reward is favorable. If about 1/6 of those things go beyond 2R, we can say, oh, it turns out that other people at other time frames, at higher time frames with more money, are starting to come into that position and are going to carry it forward on their time frames. It's not because I had magic knowledge that figured out that they were going to do that. No, it's just the law of large numbers that occasionally, when we are buying them at or near turning points, sometimes those things grow to become bigger trades as people from higher and higher time frames start getting triggered by the price action. And so we're going to experience fat right tails, but a very strictly controlled left-hand side. So the fat right tails, I never even worry about, well, why did that happen? I don't care. It just, sometimes bad thing or good things happen to bad people. Well, we can be a little more precise on that too. We can actually look for what I call the compound critical state. All right. So the first idea is a critical state. The critical state means that prices in a location that allows for a larger than normal move in either direction in a shorter period of time. That there's something about this moment that it's excitable. It's like, I like to think of it as the microwave popcorn you put in the microwave. At 45 seconds, it's going to start popping, and it's going to pop for 45 seconds. So between 0 and 40, you're not going to hear anything popping. Now, you could own that, and you could wait for those 40 seconds, or if you know where the 45-second mark is, you can start buying it around 40 before it starts popping, and then within a very few seconds, that thing should start working. If it starts working, then you're not surprised. If it doesn't start working, you start saying, there's something wrong with my whole thing. Maybe it's better just to get out. On the other hand, when that thing's been working for 45 seconds, well, at around 40 seconds, it's not popping as much. And at 45 seconds, it's almost done. And just because it popped for 45 seconds, if you know anything about that bag of popcorn, you realize that it's done and that waiting an extra 45 seconds ain't going to help the team. So what we want to do is use our statistics to describe normal behavior for that target over that period of time and have some kind of reasonable way to estimate what a 2R gain versus a 1R risk actually represents. So if I can get into positions on a 3-minute time frame where the 10-period moving regression line has turned after it has made a statistically significant move in one direction, meaning a larger than normal move in one direction defined by a statistic, I can now say, that symbol is in play. It was not just the normal noise. It was a statistically significant move in one direction. And that means there was clear winners and losers, and they're both motivated now. So now the move after that is likely to also be large because it's in play. And if we can find a natural turning point and a momentary pause, I can now bracket that trade and say, I have no directional bias. There were reasons why it sold off that much. And maybe those reasons are still true. So if it pauses and then goes another leg of the same distance in the same direction, I'm not allowed to be surprised. because that's the last thing that it just did. And all those guys that are winning are piling on. But at the same time, if it moved a certain distance and they're satisfied, and now buyers come in because they want to buy a quality product on sale, and they come in with motivated buying, well, it would not be surprising for that price to return just to where it was before it made the big move. So in either case, I have a reasonable. I'm not allowed to be. That's why I like to say it. I'm not making a prediction, but I'm not allowed to be surprised if there is a big move following a big move. And I'm not going to predict which way it goes, but I'm going to follow price. And what I'm going to do is have a relatively small risk box compared to a relatively larger reward box. And then I'm going to use support and resistance and statistics and whatnot to start describing the length of those legs and those moves. So I'm going to have a statistical framework on there. And then what I'm going to look for are symbols and opportunities where I get a lot of those setups. Now, if what I just described was on the 3-minute bar, that's okay. But what I want now is a compound critical state. A compound critical state is defined as more than one time frame finds itself in the position of larger than normal move in either direction in a shorter period of time. So if, for instance, on like the daily sniper, I'm going to move out to the daily bars. If there's something that is in the oversold zone on a 10-day and a 30-day and 150-day look back period, every one of those three demographics are agitated about that price because it's now near that significant low for them. And if it breaks below that low, they're all going to be motivated sellers because they got to get out of their position. It's hitting all their stops. It's breaking down to new lows. Or they're going to be motivated shorts and are going to try to pile on and influence the price to go lower. So the fact that all three of those time frames are at that critical state is going to be a surprising factor to all of them because they're used to trading with the volume and the volatility of the guys that they trade with. But now all of a sudden, if I'm a 10-day trader, now the 30-day and the 150-day money starts coming in, and now suddenly this thing is breaking down and there's an enormous amount of volume, and now they're off and running. So we're going to get some fear and greed momentum that gets piled on, so we can get these exaggerated moves that surprises every single demographic. Well, the same thing works on the reverse. So generally speaking, a compound critical state is going to feature two factors: the price location with respect to a look back period that makes it significant. It's in the upper or lower 10% of each of those look back periods, close to the boundary. Guys are taking extra care, ready for a breakout or ready to bail. And I'm going to be looking at the volatility. What I'm looking for is abnormal volatility over the last 5 days. Why 5 days? Well, if you take a look at all of the 40-day holding periods of the last 10 years or 20 years, like I do, and so I go back 20 years and I said, well, if I bought it at 20 years ago and held it for 40 days and sold it, what was the net percentage? That's the 40-day volatility of that. What was the difference in price net? And then march it forward 1 day, and then 1 day, and then 1 day. What I end up having is about 5,000 data points that describe 40 days holding. What's the behavior? And what's that thing look like? Well, it looks like it's not a normal distribution. It has a cluster around the average, but it has very fat tails, 10 sigma tails. That's interesting. Well, if you do that now for the 20-day, 10-day, 5-day, and 1 day, it turns out that on average, the worst 5-day or the best 5-day moves are about 60% as big as the 40-day moves. What that means is that the most of the pain and suffering, most of the joy that accrues to those 40-day, well, that's a 6-week, 8-week holding period. That's a long-term swing. 60% of that move is happening in 5 days. So you got 8 bites at the apple, so to speak, on a 5-day chunk. So what I look for now is abnormal volatility over the last 5 days within that long look back context. I either want abnormally large volatility or abnormally small volatility. Why? Well, abnormally large volatility means it's already in play. We're watching it run. It's running through the desert with its hair on fire, as we would like to say, right? So, how do you get that? It could have been 4 quiet days, and then today was a large 1-day move where it had the breakout, and it turns out that that 1 day of extreme volatility makes the 5-day volatility abnormal, and you can bet that tomorrow is going to be an interesting day. It has to be. There's too much imbalance that's got to be settled. So a large 5-day volatility could have come from one big day, or it could have been 5 days of directional marching. And now the net of that is just unavoidable. Holy crap, this thing is just going and going and it's not looking back. That's the kind of move that you end up seeing in symbols like International Paper, Caterpillar, Home Depot, things you wouldn't normally think of as, high speed trading targets. But it turns out that those things will trade in that way. Brazil and Mexico will trade in that way. So an abnormally large 5-day volatility tells you that there's something special going on, and you may be able to capitalize on that with discipline. On the other side, I like abnormally quiet volatility because now the size of my risk box for the breakout is smaller. It's quiet. Yeah, it's too quiet. And so when anybody throws a rock into a very still pond, that splash is exaggerated and could be the thing that triggers the herd to start moving. So my theory of volatility is that you get abnormal results from abnormal starting positions. So if it's abnormally quiet or abnormally volatile, then the follow-throughs are typically larger than average. Now, if you combine a multiple time frame location that is critical and a volatility that is special, now you have the ingredients for a compound critical state. So you can search for that and in as many symbols as you want and come up with things that are in that category. And now you can start thinking about swing trading 1 day at a time. This might be the day that it actually breaks out and starts to move. Well, if today is the day that it's starting that move, then the intraday trade is the easiest trade you ever made because it's going to be abnormally large and more directional than usual on heavy volume. It's like, dude, got it. And the avalanche or the collapsing dragon is the preferred one on that because fear is stronger than greed. Well, if today was day 1 of what could be a great swing trade, then you can actually have a large position intraday, carry smaller overnight risk, and then add the turbo position back on during the day. It's either going to continue in the direction it went, or today's going to be the reversion back to normal because yesterday was a fake. Either way, you're going to get a large move as a follow through after the first good day. And then you can keep trading that symbol, building up your local knowledge of the environment with statistics until the swing trade stop is hit. So if you know what that thing is supposed to do on a swing trade and it pulls back and now you hit your stop, then you know that whole chapter or that series is over, and then you can just recycle your money. So that's what Eric Moe's doing. That's what I'm doing all the time. I am mostly an intraday trader with occasional swing trades that are built on the back of intraday positions and then using markets money to pay for the overnight risk while that trade is open. So what you'll hear us looking for all the time is compound critical states. That's what you'll see with Eric Moe. That's what you'll see on the daily reports. A lot of different varieties of trying to find things that are in those exceptional positions and conditions. All right, so that's what I wanted to say about that. All right, what I want to do is let's roll in our usual way. Let's roll over to Hamad quick, and then Chi Wing, Chong, and Kyun, and we'll probably defer Matthew 1 week on your trading skills and whatnot, so we can kind of go through one series, and we'll see where we are after these guys go through their stuff. All right, Hamad, over to you.
Yeah, sorry about that. Starting in the usual way, I guess my goal for the year is to establish an equities trading business for EIO. And part of that is to automate an intraday trading strategy. It would be initially focused on MNQ, but then we can leverage that success and look at other symbols such as, ME, the Dow, the S&P, and potentially the Nikkei as well. So what I've been doing is I've ran this research on volatility, kind of inspired by what Matthew was doing with one of the things one of the documents that he shared. So I got inspired by it, and I started researching volatility on MNQ to understand what are the best times of day for me to trade it. And the other thing that I've been working on the last week is kind of our in-house coder has signed up with is signed up with us. So I was sharing with him the indicators. Basically, what I was doing is I was getting the indicators I wanted from Claude Sonnet, getting Claude to write the code, making sure the code works on TradingView up to my standards, and then kind of translating that again to Python and shipping it off to the coder, just to expedite things so I can build the business faster. And yeah, we have our trading accounts ready with our prime broker, and yeah, so next week I'm going to be working on funding those accounts and starting to collect data on MNQ. So my discussion points for this week are basically I noticed that the VWAP on the Qs is very different than the VWAP on MNQ. Naturally, MNQ trades 24/7, but the Qs are traded 8 hours, 7 hours and a half.
Yep.
So I think that's something that I'll need to adjust, because that will put me in or out of positions faster or slower.
Yeah, 100%. You want to use the VWAP of the target that you're trading, because that's the one that is reporting the positions of the other live traders. Because it represents their view of fair value mathematically. So you definitely want to use the VWAP calculated by the future.
Yeah, but do I want to base it off an 8-hour period? Do I want to base it off the start? Because if I base it off the start and it starts at some point, let's say 16 hours later, price is down here and the VWAP is struggling to catch up. I'll show you an example.
I would start with where it was. I would always know where the VWAP was at the close of the normal New York session, but I would treat the after hours VWAP purely on the after hours data.
Yeah,
because otherwise it's not going to be strong enough to offset the weight of the VWAP from the intraday session because the volume is not the same. You really want to be able to react to the choices the live traders are making. You should be mindful of where the VWAP started from. But I would take the information from maybe if you took the last hour. I don't know. But I would be more sensitive to the to the live data from the after hour session. Now, the other thing I'm going to say, when you start thinking in terms of the keep percentage, the max favorable excursion from your entry,
Yeah.
The other indicators will become less important. The
Yeah.
most important one will be, I think, the RL10, because
Hmm.
when that slope changes, you have enough evidence that we're at a transition point, a
Yeah.
potential transition point, and now
Yeah.
you're going to make your decision about how much to keep as a function of how much you gained.
Exactly.
And the
Exactly.
VWAP, the other one. So the other ones are interesting. They actually will give you ideas about, do you have a tradable target on the
Mm.
reversal? And for that, you want to know where the guys were buying on the way up. So that's why
Yeah.
you need to have the VWAP anchored to the futures performance itself.
Yeah. So one of the things that I'm thinking about now that I'm getting everything coded is I can basically test out the VWAP. Should I anchor it to the start of the New York session? Should I anchor it to the start of, like, basically, after the overnight gap? So these are things that I'm gonna test to figure out. I'm personally leaning towards having the VWAP anchored to the beginning of sessions.
Yeah, I
So that
think that's.
going like
I
the New
would do.
York
I'd put
session.
them both on there. I
Yeah.
just watch them both for a while. I
Yeah.
think you'll find it. You want it anchored to the start of the session.
Yeah. So that's one thing. And then along with the volatility thing, I realized that at a risk of $100, I'm really limited to how many lots I can trade.
Yeah,
Um, and then I'm also, because the $100 risk per trade on the micros is small. Because, like, for example, right now the R10 is at 55 points, which means I can't trade a lot.
right.
Uh, so I have to accommodate that, I've thought about two solutions. Number one is just increase risk per trade to $200. That allows me to trade the R6 and the R5.
Yep.
And then I can trade the 10-minute charts properly.
Yeah, the whole idea of the $100 trade was when you were trading in the open session, you
Yeah,
could actually trade that, and then you
yeah,
have a small enough position size, you're not going to cause harm, but it's large enough that you have skin in the game, and then you can get a lot of trades, and then you can do the stats on your performance.
yeah,
For the after hours market, I don't see any issue going to $200, because as a fraction of your portfolio, that's a very
yeah.
small number. So I wouldn't worry about that.
So
And
this,
being able to trade R5 and R6 with a 10-minute chart seems reasonable.
yeah. So the other thing I can do is I can basically just cap my risk per trade at $150, and then just trade the R10 risk box on the 3-minute charts. And this is kind of supported by some of the volatility analysis that I have done. So let me walk you through that.
Okay.
And I'll tell you what I'm thinking in terms of risk boxes. So I kind of downloaded data off TradingView, hourly range data,
Yeah.
to look at what are the best times for me to trade throughout the day.
Yep.
Um, Unsurprisingly, 10 a.m., 9 a.m., these are all Eastern times, New York times. So 10 a.m.,
Yep.
9 a.m., 3 p.m., right an hour before close, 11 a.m., basically the market open. But then what I did was I also charted the volatility in a graph,
Yep.
on this graph, to kind of see how it kind of changes throughout the day. And there's I've noticed that there's a volatility spike at 3 a.m. This is basically where the European markets open.
Yeah.
And typically, to capture these moves, I've noticed over the past week, I need to be ready to trade around 2 a.m. New York.
Yeah.
So that's a bit of an unreasonable hour for me to trade, because that's typically when I'm back from the gym and kind of, getting ready to go to work. Um, but then this is really cool, because this is something I've noticed. Volatility starts picking up again at 6 a.m. And
Yeah.
then that's kind of where the data comes out at between 7, at 8:30. Market open. So clearly that's what I want to be trading. This is lunchtime.
Yeah.
And then we have a dip again in the post market. So
Yeah. This is a working period. This is steady state.
yeah,
So guys are taking signals there. This is just guys left work,
mm,
and then the guys that are sticking around to trade are trading here, and this is where they leave work. And then this
yeah,
is all much fewer traders,
yeah,
not as much volume. Uh, you'll get some spiky volume and little follow through there, What you might find it works in this time frame is the abnormal pinch box,
Yeah.
a quick breakout, and then don't stick around. Just
Yeah.
capture.
Breakout, no lose, call it a day.
Yeah, yeah. So that's
Yeah.
what this is the the pre-market stuff.
Yeah.
This is this is professional trading at a reduced level of volume, but
Yeah.
it's a steady state. And yeah, this is the new guys coming in, and then guys trying to fill up their take their positions in a hurry.
Yeah.
Sure. All right.
And so this is something I kind of realized on while I was trading during non-farms on Friday. And I'll put up my chart to tell you what I'm thinking. So my idea is to continue risk $150 per trade for a week. Continue trading the R10 because what I can do is in the pre-market and this kind of in this area,
Yeah.
I can comfortably use, sorry, don't worry about the position sizing right now, but I can comfortably use the R10 to take risk, and I can reasonably trade with the PSAL and the other indicators.
Yeah.
However, when volatility expands at open, so my rules currently dictate that I start after the open, if I don't have any new positions running into the open, what I do is I wait 30 minutes and then take the first 3-minute pattern. So if I'm doing that, shouldn't I just I can basically use the R10 and just continue trading the 3 minutes?
Yeah. So this would be that's where you're waiting.
Yeah.
Are you? Yeah. I don't have any problem you taking that. That's a good trade.
Yeah.
The exit seems premature. I'm not sure why.
Because the risk box is too small, so I'm getting to
got it,
2R
got it.
too
Yeah,
fast,
yeah.
right? I'm not able to capture the move. This
Yeah.
is an R10, right? So
Yeah.
if I place this box in here, which is an R6, then
Yeah.
it's reasonable. Yeah. Then I'll be like on the trade, I'll get out at the right time. And so this was something
Yeah.
that I was running into on Friday, and it just
Yeah.
kind of made me realize,
Yeah, I think you just need a different risk box for after this moment because you got a whole
yeah,
new trading crew and you're getting wider volatility. So
yes,
this is a great entry, and we should probably be able to. This is where that rule of 4 looks like. You say, if this was my entry and that was my
yeah,
maximum favorable excursion, I'm keeping
yeah,
half and a quarter. You should end up probably getting out not later than here.
yeah, yeah,
So you'll make that one.
yeah.
Yeah.
But yeah, so again, between the two solutions that I'm looking at, it's can use a 10-minute chart in the pre-market, use the R10 on the 10-minute chart, and then
Yeah.
when the market opens, focus on the 3-minute charts. And
Yeah.
since I'm trading only one symbol, but with size, I think I can reduce the level of choppiness that I used to get into.
Yeah.
Back when I was trying to do 3 or 4.
Yeah.
Again, it's all about it. It's right now it's just a testing game where
Yeah.
take a few shots, see what happens.
Yeah. Now this is where that rule of 4 really works later. So if you say that is the fair value, the previous VWAP,
Mm-hmm.
then you have your 1, 2, 3 legs down. This
Yeah.
is where you just take that, set that equal to 0, that equal to 100. It's nice. Oh, the VWAP's right at the half.
Yeah.
So that says, yeah, you have to get long by not later than here,
Yeah.
which you do. And then when this crosses the half line, your stop should be at no lose plus dinner for 2.
Yeah.
And then if it gets, by the time it's here, that's where your stop should be. And
Yeah.
then when this thing gets past, so you have 1 unit of risk, 1, 2, 3 potential rewards. You give it 1, you aim for 3, you settle for 2, you keep 1. So when this thing gets up above 2.5 and starts rolling over, now you're entitled to get out here or here. So this that little rule of 4 after the move, especially you see 3 legs.
Yeah.
That gives you a nice sight picture.
Yeah.
On the way back.
Yeah.
That actually lets you say, look, this might have given you a chance to get in here somewhere or here, because
Yeah.
you have the rollover. It crosses below the VWAP, so now I can use that as a risk.
Mm.
And then the return down to here would not be surprising. It gets halfway and stales, so you don't lose money on that trade, but it's worth taking.
Yeah. Yeah. So yeah, so that's basically what I am with my thinking in terms of using the risk box on this thing.
Yeah.
The data to support whether to increase position sizing or not is right here. So I'm kind of averaging 2 to 1
Yeah.
on a 50-50 win rate.
Yep.
Expectancy is decent. Yeah, I mean, the last week volatility was terrible, and I just wanted to trade to test out the data and
Yeah.
see how I'm aligned with the market. And it was, yeah, I mean, last week I didn't make money, but it doesn't matter, right? Because like the insight that I got was just was so powerful.
Yeah.
And so yeah, as I said, like I'm kind of between those two solutions where I just go ahead and increase my risk per trade to $200, and I trade the 3 minutes and the 10 minutes at the same time,
Yep.
or I go like, okay, I'm gonna risk $150 and just focus on the 3 minutes. What are your thoughts on that one?
I like it. Use the sometimes you're going to see that the 3 minute trade will be working, and then the 10 minute trade comes on board and it's still working. That's I'd put a second position on that, because normally the 3 minute will have worked enough. That's where you can think about getting a second position. Think of the
All
three
right.
minute as the core, or
Okay.
almost
Okay.
almost 3 minute turbo, 10 minute core, but you get the turbo trade first.
Okay. 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 Yeah. Yeah.
And then when you're out, you're all out.
Yeah.
Yeah.
Yeah. And I think that fits in nicely. That fits in nicely because then okay, because on the 3 minutes you can be trading within the 10 minute
Right.
R10 swings, and yeah,
Right.
that makes a lot of sense. Okay. Okay, got it. Um, so that's that. The last thing I want to kind of double check is on my trading journal, I started basically measuring the maximum favorable and adverse excursion. And what I want to double check is, for instance, on this trade in here, the maximum favorable excursion would be the absolute low of the candle, right?
Yep. Yep.
And then the maximum adverse excursion, would it be this high right here, or just ignore it?
Well, what you wanted the maximum adverse excursion was what was the lowest value of the trade while you were in it.
Okay.
Right? So it's like if it ever went to minus 0.5 R or something like that, or you know,
Yeah.
Because what we found is that the over time that if my entry is here and there's my risk box,
Yeah.
it is very rare for something to come down to minus 0.9, and then that's the one that becomes the winner. The ones we
Yeah.
get are normally it hits it, it gets going pretty well right away. We can get our risk out, and then you just decide how much you're going to keep.
Yeah. Yeah.
So understanding the maximum adverse excursion lets you know how much heat you have to tolerate. And here's why that works. One of the things that we were doing was using when you had an open, we were putting a full frog box around either one, which is the equivalent of about 3 times the R10.
Mm.
And so it would leave and it would break out. So we'd buy it here, and we had a full frog box 1.0 right there, and we would just trail with one, and then it would come back, and then we'd hit it, and so we were getting an average win of about 0.6. Well, to get an average win of 0.6, what that means is from the open, that thing had to go one frog box to enter. It had to go to 1.6 before it ever came back a full -1. to get to 0.6. Well, what that means is there was a 2.6 move from the open, of which we were capturing 0.6. Well, that's not good. That's not very efficient. So what we learned was, instead of waiting a full 1.0, now if I could take even half a frog box and now I could get the entry at 0.5, that thing now could still go to 1.6 and come back. And now I'd be getting a 1.1 trade. That's a little better. And what we learned was that there are times when you could have even a third of a frog box, which is about what the R10 is. So, and the reason we learned that we could do that was that on the trades that went to 1.6 and came back, they almost never dipped underneath and went, but they never went more than 0.5 against us to keep going. So we were taking a wider risk than we had to. And that was causing us to stick around too late. So the things that we did to improve that were to get in sooner with a smaller risk, get in faster. So we were already getting in by the time the regular frog would get in. And then after it made its point and reversal, don't wait for a full frog box reversal. We would look to trim that sooner. And so everything that we've been doing is trying to get, so taking the PSAR stop, taking the skin of the dragon stop. And really my current thinking on that now is, from the moment of entry, you got some maximum favorable excursion. Whatever that is, you should always know, how much of my best trade do I want to keep? 50%, 75%. You can't keep 100%, or you're always getting out every time you make a new high. So you can't do that. Now, the guide on that one is, you say, look, as long as, price is moving around and whatever, as long as the slope of the RL10 is favorable, it's still going in your direction. As soon as that thing stalls and starts to roll over, your stop should really be at the, what I have a hard time giving back more than 50%. I feel stupid. 75%, I feel like, all right, I'm keeping 2, or I'm keeping 3 and giving back 1. All right, I could live with that. If I keep 70%, then I'm keeping 2, giving back 1 with a little slippage. So my psychology says, if I'm somewhere around keep 70 to 75%, then I'm going to feel professional enough that I'm not going to try to second guess myself. The advantage of doing this is all I have to do is know what my thermometer reading is and just dial that in. And then the price action kicks it out. I don't have to sit and interpret, well, was that a big candle and then a 1, 2, 3, or where's the drag? I don't have to do any of that crap. I just know, hey, what's my percentage that I want to keep?
Yeah.
And the more positions you have, or the more frequently you're trading that, the easier it is to establish a discipline. The other advantage of that is that it's very easy to back test different exit strategies. I can use my same entry, whatever my entry was that was good enough. The maximum favorable excursion is always what it was. And at any moment, I can say, hey, if I wanted to only keep 30% or 40% or 50% or 60 or 70 or 80, what is my net by making one simple adjustment? And then it will find the right place to exit. And now I can very simply test an exit strategy. If I have an entry strategy that's good enough, I'm okay. The other reason that this works is you can now say, hey, if this was my maximum adverse excursion from the close, a reversion back to yesterday's close or VWAP is not surprising,
Yeah,
right? Because that's the market profile. It's supposed to go
exactly.
there. So
Exactly.
I can now use the same when I have an open position and I'm trying to decide how much to keep as a function of where I entered in the maximum favorable. I can now say, well, here's a position that I didn't take, but that's the move. Don't I have to get in by the 25th percentile? If I get in here, no matter what the particular chart pattern is, the simple the movement off the low. So if I get in at the 25th percentile, I have 3 units of reward back to a reasonable target. Now, if this was the low of the day, and I have, it's not surprising when that's about an R10. Now you have 3 R10s. If it gets above this line, there's 6 more of those risk boxes before it gets to the range stat.
Yeah.
So you're actually working hard on that first, or then if it works, you can add a second position here because the range stat is now more likely.
Yeah.
So it
Yeah.
turns out that keep percentage, or what I've been calling the K percentage, works from the peak of the R10 to the bottom of the R10. As long as you know where those numbers are, half and half again, you're going to be in the ballpark, and that will simplify your decision making a lot. It's not surprising that when that thing comes down here and reverses, that 25% retracement, that's almost always where the PSAR flip is.
Yeah.
It's uncanny how that works. Look for that inside your as you're back testing and forward
Yeah.
trading. Okay.
Mm.
All right.
So yeah, that's kind of where I'm at. I've got a good idea of kind of how to start next week.
Yeah.
Just to share more insights from my like just little research. I'm going to share this document with everybody on this call. Happy to put it on the coaching website as well if someone is interested in trading
Yeah.
futures. So some of the other studies that I did was I looked at volatility by day to see what days are best to trade what and when to focus on what. So yeah, Wednesday and Thursday tend to be the most volatile. Monday and Friday not so much. I guess it's to do with FOMC. I don't know.
Yeah, I think it's also they're pre-positioning on Thursday for Friday's closeout trade. I think.
Yeah.
I don't know.
And then volatility by month. I mean, April and March, I'm not surprised. They've always been really good months to me. But then December really stands out. So now I can also plan my holidays. Basically, I can take time off in July and November.
Yeah.
Yeah, that's kind of about it. Yeah, looking forward to. I'm really excited that we have an in-house coder where I can get him to code things for me and backtest things for me. So that's something I'm really excited about.
Well,
Yeah.
you also have enough skills now with your trading view that you know what right should approximately look like.
Yeah.
That way you can check his code. The results of his code should be similar to yours, if not identical. So,
Yeah, no, I've been feeding him my code basically. I've been like, this is the calculation, this is what you need to apply to Python.
yeah.
Test it out and give me what reading are you getting. So
Okay.
yeah,
Good.
all good on my
Hey,
side.
Ahmad, I got a couple of questions on the data here. Very interesting stuff, the volatility. I was going to ask you, go up a little bit on the days, on the days, on
Days
the
of the
day.
week, yeah.
Yeah, that's it. How did you measure that volatility? Was it average plus SD or range or
What I did was I basically went to TradingView, export data, got all the data that I can
yeah,
get on MNQ,
yeah,
and went high minus low range. I
high minus low for the day. Yeah,
Yeah. Yeah, so
for each
basically
day.
the range, and then I fed it to Claude. I just CSV file into Claude, and we started interacting. I had to
But what
typically I
was
have to
what's
check.
average then? What does average volatility means? The average of all the ranges? in for that day? Is that what it
So
means?
this average, this dotted line, the overall
Yeah, no,
average,
the table it says average volatility
Is
for
that
average for
30,
points?
that
for
day.
example. So what is the volatility measure? Is it for the high and low of the range, or is it like an
I just
average
looked
of
at high
all
minus
the,
low.
huh?
I looked at high minus low.
So that's points.
Yeah, I looked at it in points, and the reason I look at it in points is because it's easier to calibrate with the range chart with the R10. Because I know the R10 is 55 points, and I know the volatility per hour is 160 points. So that means I've got a 2-to-1 or a 3-to-1. I can take a
Yeah.
trade. I can trade within that time zone, just theoretically.
The only thing, what you got to watch on this, once you get out past about a month, you need to be converting that into, you got to use this formula, high minus low divided by the close, and convert that to a percentage.
Okay, I see why.
Yeah, because
Yeah,
the
because if
range,
it was $50 on 1 January and it was trading $2, you got a 4% volatility.
Yeah,
If that thing had a really good bull market like last year, and it
yeah,
was at $100 and it was trading $2, the
Hmm.
average true range or whatever would be a flat line, but it's really volatility got cut in half.
yeah.
So uh, once you start looking at longer time frames, you gotta divide by the closing price
Okay,
in order to
okay.
get that as a range percentage, and then that'll allow you to compare apples and oranges. And the other thing is when you start adding different units, if I was trading fucking, I don't know, Bitcoin or BITO, and it was a $10 ETF and it was trading two, you might say, oh, well, they're both two, so the volatility is the same. No, this one is trading 20%. This one's trading 4%. If I did that, yeah,
Yeah, yeah,
20%
yeah.
of his price is that, and that really matters.
Yes,
If you when you look
true.
on the daily report, those top 10 best traders intraday, I'm looking at range percentage, average range
Mm,
percentage.
mm.
And some of those things are moving, like the marijuana and Palantir are trading 10% of their price daily.
Yeah,
So when you want to compare between symbols, you always got to come back to range percentage
yeah.
to normalize it. Or looking at it over its comparing it to itself over time. Okay.
Cool. I'll fix this and then share the document because that's a really
Yeah.
important insight. Yeah,
Yep.
thanks.
Yep. You'll see that's important once you start looking at the other futures
Yeah,
at the same time. Okay.
yeah, because this is like a 6-year study, right? So it
Yeah.
needs
Yeah.
to,
Yeah.
I need to look at, and there's a lot of volatility and a lot of price changes.
Yep.
Thanks for the tip, Dr.
Yep.
Ken. Yeah,
Yep.
appreciate it.
All right,
Yeah,
Ken,
that's
how are
it
you
from me,
doing for
guys.
time? Ken, how are you doing on time?
I'm okay. I just
Okay.
probably got to stand up at some point.
Okay.
I
Chi
don't
Wing
know, but
Chung.
I'm okay.
Chi Wing, let's go to
Chi
you.
Wang, yeah, let him go.
Okay. Good. If you want to go first, it's okay.
No, it's okay. Go ahead. Go ahead.
Okay.
You
So,
were off last week and I had a session, so
okay, now, okay. Oh, can you see my screen?
Coming up. There we go. Yes, sir.
Okay, so basically right now I'm focusing on the 3 minute and the R10 crossing the SMA 30 pattern. And basically here you can see the pink color is actually the key percent. Here I'm setting basically it's the delta between the R10 minus the SMA 30. So I'm setting it now to be 75%. So I'm thinking is that basically if the R10 slope is continue to be rising, I'll just use a traditional either PSAR or the dragon
Yeah.
bottom skin of dragon. Well, and as long as it's a turnover, then I'll just uh jump to the
Take the
55.
highest point. Yeah.
Yeah. And right now actually it's very similar to the jump stop as
Yeah.
where we
Yeah.
yeah
But what it does is it gives you a live price all the time.
yeah
Yeah, I like that.
yeah. Um, but one question for Ken, for example, like if once for this one, if it's ender and immediately before, it's like there's no follow through and uh
Quick scratch.
when yeah, okay, yeah, then basically it's just
Yeah,
scratch is
because
right.
this, yeah, the decision you have to make on this one, let me find my annotation. On this one, you got to say, here's my maximum favorable excursion. This is where it went to. So now I got to decide in here, do I get short here or do I get short here? If you decide to get short here, it's because, you said, here's half, here's a quarter. So you'd end up getting short like about there with that as your risk box. It comes down through here, holds. The second time it comes back to the VWAP, I'd probably be out. I'd be thinking about being out right there because that's after the turn in the RL10. When that turns, I probably want to preserve that. So I'd probably be looking at that trade. I'd be happy with that. If you decide not to take this one, but you want to see, hey, let me see the uh, crossing of the VWAP as the end of the upside, then you might say, look, when price or when the RL10 goes through the SMA 30, I could be think about getting short somewhere in here or in here.
Yep.
But that quick reversal, I probably take a small loss in here. I would try this one long for sure because you have this, you have it holding at the VWAP and now breaking the PSAR on the way up. I take that one all day. When that fails, I now have a COTA 2 to the downside, and I'm short here all day. And then this one comes almost, it gets 3/4 of the way back to the previous support. So I probably take a couple small losses in here, but I'm going to definitely get that one.
Okay.
This is the one where when that does not fail. So here's the exaggerated move to the downside. You hope it's going to get back to whatever that previous high was. When it gets across the VWAP and does not fail, somewhere in here, I probably am getting a second position. And that's where this exit is pretty good because the second position is still in the money.
Okay.
It wouldn't have
Understood.
surprised me to get chased out right here though, too, to keep that flat. The second position always makes me nervous.
Yeah. Understand.
Yeah, I like
Yeah.
that XLI. That's one of the beauties. Not a sexy symbol. That's
Yeah.
where you get your international paper, Caterpillar, that kind of stuff. The industrial sector. All right, keep going.
Yep. And the other thing is that as you see the blue color basically is the just the Don Chen channel based on the RL10.
Yep.
This is just to highlight to me the RL10 the turning point.
Yeah.
Yeah. So I'm right now using a 30 period. I mean just most likely like it can highlight basically all the peak of the RL10.
Yeah.
Yeah. So
Yeah. On this one, you
and
could either say, look, here was where it ended. So when I'm down here in the afternoon at the maximum,
yeah.
my rule of 10 is either going to go to there or you could go to the high of the day. In either case, you're entering somewhere around here. And then the Donchian breakout confirms that. You feel pretty good by that point. If you're getting in here, as you should, breaks the Donchian channel, that feels pretty good. And then it breaks the VWAP, that feels even better. Second position probably in here. Yeah, and I'd probably end up getting out right here because I'm a chicken.
Yeah.
So scratch the second one exit the first one right there. Okay, what
Yeah.
else you got?
Yeah. I think then the last thing is basically maybe I shift to the other chart. Right now basically I'm using a faster MACD. It's like similar to yours when you use a 435.
I'm using the 4 and the 30 right
Yeah.
now. I just think that's better. That will get you
Yeah.
a quicker alert.
Yeah. Correct.
It'll give you a quicker set of alerts down around
Yeah.
in here,
Correct.
the turning points.
Yeah.
And then this
Yeah.
one is nice because you get it did not fail.
Yeah.
Very thin. The thin red river gives you a volatility pinch. So the breakout from that is really good.
Yeah. Yeah, because because it's also a line basically when you change to a summer or change to a winter, basically it's the
It
crossing of
changes
the
sooner. It changes a little quicker. Yeah.
yeah. And also basically if you change to winter, when after it cross the R10, basically it will highlight the either K2 or the CD. So
Yeah.
basically I can use
Try
this as a
take a look at the 20 period, Dacian. That might give you a
okay.
little tighter breakout in here.
Okay.
Because what you really
Okay.
want to see, the Dacian channel is going to help you find the relative breakouts. So the sooner, the 30 is almost too late. I don't know. Just see see which one you like better.
Okay. Because initially I would just want to highlight just automatically
Yeah.
highlight the range of
Yeah.
the R. Yeah, it's not per se to as a breakout channel, but just to highlight to me where's the turning point of the R
Yeah.
10.
Yeah.
Yeah, yeah. I think yeah, that's all from me. Yeah.
Okay. What else you got?
That's all. Thank you.
Already.
Mm.
And let's see. All right, Kian.
Yep. So my feedback is, so I tried this rule of four, and I actually really quite like it. I think the exits and the turning point solves one of the problems I had, which was if I waited for the peace out flip, sometimes it was just too long, and
Right.
and no, I like it in that sense. The problems, I'll show some charts later in a minute, but I just kind of set the groundwork. I think the challenge I found was sometimes when you are thinking of the exit, you are almost thinking of the next entry because it
Right. Yeah.
reverses and goes up, and that was too
If you
fast for me.
plan, yeah. Well,
You
that's
know?
why I would say what I would suggest is take a look at the slope of the RL30 to get the health of the trend,
Yeah,
and trade in the direction of the slope
yeah,
of the RL30, which is
okay,
the direction of the river.
yeah,
And I would just say don't trade against the river. Wait till it crosses the river,
yeah,
because then it's really working, and the river's going to end up rolling over. So what that'll do is it'll give you a very clear directional bias. What that does is after a good trade, like if we think back to the XLI trade that we just saw, the second
yeah,
position when it crossed the VWAP, you get that really nice long move that has some power. You would
yeah,
then have to trade against that right away. And in a symbol like XLI, which is not a live active trading vehicle normally, you could probably get away with quick reversals in the Qs and the IWM and maybe the ES. But in something like XLI, that thing has a directional bias. And if you geared into that big, you would rather let it pull back to the VWAP and then hit a kata 2 for the next leg up is better than trying to be overly active.
yeah,
So,
yeah,
this
yeah.
has a
I
lot to
do.
do.
Yeah, yeah,
This has a lot to do with the target that you're trading, and how much
yeah.
time is left in the day, and all of that stuff. Something like the
Mhm.
Russell, which is a intraday trading vehicle, you can be more active. But if you're looking to be like 30-minute charts and swing that hybrid swing trading, I would try to stay directional and not try to
Yeah,
be stop and reverse. So, but you're right. That's what that rule of four forces you to think in that way.
yeah,
The good
yeah,
news, though, is it
exactly.
makes
So
it.
I was,
The
yeah,
good news is it makes it easier to exit. It makes it easier to
yeah,
exit your good
definitely.
trade because you
Yeah,
realize, hey, there's a lot of guys that are already thinking about trading this the other way. So I need to
yeah.
get out of my trade. Yeah.
Yeah, so that I think that's one of the challenges, and obviously, and I was thinking along those lines. I was actually the RL30 and the health, so I'll look at that. I was thinking actually of the slope angle of the trend, whether that tells me anything, and also, as you say, the time of the day. So I trade
Yeah.
Tesla, right? So the first 45 minutes, this is a wild thing. Right? It can be a wild thing when it's
Sure.
wild, right?
Sure.
And
Yeah.
then the ranges of the bars are really big, and it goes, really wide. But then after that, it becomes like a river, downriver.
Then it's
It's
stable. Yep.
right.
Then it's
Then it becomes like the XLI. It becomes slower, and I almost stopped using the rule of four. I said I can more or less I use it, but I said the Pisa flip does quite a good job in
Yeah.
that environment. So I
Yeah.
kind of I'm kind of
Well,
splitting
here's
my
what the rule of what you'll find the rule of four is very helpful on is that your opinion about the reward to risk does not change when you change your time frame,
yeah
right? Because if you get a maximum adverse excursion and now it's not failing any further, and you think, well, I think it could reverse to yesterday's close, that distance in the rule of four, those numbers are stable, whether you're looking at 1 minute, 3 minute, 5 minute, 15 minute, whatever. That's an absolute dollar value and gives you uh, clarity across all the time frames. So there's a simplifying function there as well. Because as you know, if you were looking at a 10-minute chart, a PSAR flip on a 10-minute chart is only a 1, 2, 3 entry on a 30-minute or whatever. So the rule of four sort of gives you a stable framework for the rest of the day.
yeah. So let me share my thing. So I think there are two, well, there are lots of issues, but I mean there's some good things, but I mean I just got
Yeah.
to focus. And one of the things that was similar to, let me just share my screen, and then we can talk about it. I think it's easier that way. Which screen is it though? Screen three, I think. Okay, screen three. It should be Tesla on a PowerPoint. Um, you guys seeing it?
Yep.
Tesla on a PowerPoint. Okay. So this is one that actually cleaned up and actually works quite well, showing the rule of four, right?
Yeah.
So this reversal and coming back,
So
and
short.
basically
Yep.
the pizza flip is just a R10. Nice. That's small.
Yeah.
That's nice for me because if it's too big, then
Yep.
that's
So
difficult.
short at the red dot, covered at the
Short at the
green.
red dot. My problem is, I think Hamad also pointed out, by this time I got 3R and my monkey is jumping all over the place, man. Because when it went down here and it went back,
Yeah.
I said, I gotta get
I,
out. I've
I
got
aim for
3R.
three, keep two. Yeah.
Exactly.
Oh
So,
damn!
so
It only gave me 3R today. Oh hell.
yeah.
Sorry.
So my monkey is all over the place. You can
Sure.
say this is a
Yeah.
premature, exit, and it did run later. And my problem was, well, it's really hard. I'm not in the zero state after this if it, when it runs down and all that. So I kind of just stayed out of it. So I can't make a decision, and I wait for the reversal, right?
Yeah.
The the,
The only
the
argument on that one would be you cashed it and then you noticed it immediately started to fail again.
yeah,
Now
yeah.
notice right below that. See, I want you. Yeah, right there. Go north. Go north.
Go
Go
north.
north. Yep. And
North.
north. Stop. See where the Z3 pinch is, or the Z3 line to the
Yep,
left.
yep. This one. Yeah.
Yeah, that's also yesterday's swing low. So when it fails through there, you could
Ah, yes.
arguably take a collapsing dragon and then get two more legs down.
Yeah, yeah. Okay, okay. Yeah, I just didn't have
Now,
any.
but
Yeah.
now let me ask you this: so you try the long breakout, it doesn't work.
Yeah.
You exit at the red dot. Did you stop and reverse there?
No, I didn't. I was like completely frazzled at this point. I
Okay.
thought I don't.
That's remember time, will, pattern, and money.
Yeah,
There's time, there's pattern, there's money, but there wasn't the will. You weren't in the zero state. But
yeah.
I want you to now notice on that move down, that's a 1, 2. There are 3 legs on that one, right? And I want you to notice that the move from the peak to the bottom of that is only half a range stat. That's only half of the maximum reasonable intraday move, which is why Tesla is so much fun.
Yeah.
Now, the second long position is perfect.
Yeah, I would say. Bit
I
early,
would
but
have been
yeah,
tempted to take
down
the Kata 2 short.
here.
Yeah, because
Yeah, I stopped
that's in the
trading at this point.
direction.
That's why I didn't mark it.
That's
But yeah,
now I'm trading in the direction of the river
yeah,
and the earlier big decisive move.
yeah.
Now, when it stabilizes at the same previous low, I now have reasons to believe.
Oh, here. Yeah, here.
Yeah, let me get my. Yeah, when this holds right here, I now have reason to believe that that's a solid support.
It's not sure. Okay, yeah, yeah, showing up. Yeah, yeah,
Yeah. So now I've got a couple R10s right here. This now becomes attractive because now I can take this move as you did here. I should be thinking about entering with 1, 2, 3 holds. And now
yeah. I
now
wasn't trading at that point,
I
but
could
yeah,
think about
I would
trading
do
this.
that. Yeah,
If
yeah,
you did
yeah,
that, you
yeah,
probably end up getting this trade. You get a fractional.
yeah,
You might have then said, well, this is really a Kata 2 on the downside. Or you just say, no, this thing's locked in a channel and I got my
yeah,
+2 net for the day and I'm good to go. And that's fine.
yeah.
So, I think if you come out of that, with +2, that's a good day at work.
Yeah. So the other thing that I found with this rule of four is that I can use the R10 more. I used to have to
Yeah,
use at least the R5, if not
right.
the R6, and I was just, waiting
Too
and
much.
sitting
Yeah,
there
you're waiting
suffering.
too long to get in. Just
Yeah.
remember that, when that thing sells off
Yeah.
and it has started to retrace, we don't know how far up that's going to go. We cannot know.
Yeah.
And so every time a guy needs to see more information to confirm that the move is happening, he's getting in later, and then the
Yeah.
amount of
Yeah.
available reward is less.
Yeah,
So
totally.
it turns out that the sooner you get in, the greater your reward, but you have to believe in it less because the probability that this fails is through this price level is greater than the probability that this one fails. You got to remember that in that structure, the turning point in the RL10 is the price that confirms that this move is a failure and that in fact the big sell-off is still true. So the higher up you go, the wider your risk box has to be, and pretty soon you run out of 2 to 1. So there's some sweet spot in here which says, how far up do I let it go? And that's really the R10 or that rule of 4. You just say whatever that is. I'm gonna give it 1, aim for 3, settle for 2, keep 1.
Yeah.
And if you ever have 1 in hand, you should never have a losing trade. That
Yeah,
trade
that reminds
that
me.
trade should never lose.
Yeah, you said something about a Darvis box or something, I think on the
Yeah,
cohort four.
yeah. So
And
Darvis,
I tend to do that. Sometimes it's too premature. It gets me out, and then I can't get in again. The
yeah,
reverse counter two. I
yeah.
just,
What
you know,
Darvis was doing was that something would be down in here in a box, and then there would be
yeah,
some breakout, And he noticed that if that thing stayed in that box and held the bottom, that
Yeah.
it had moved up a box, and then it would
Yeah.
stay in this range until some new piece of news would come in to make it go. So he would just track, as long as the Darvis box was going up, he would say, "Oh, that's fine. As long as it keeps breaking out to the upside, I'm good to go. I can add positions. But if it ever breaks down and goes to the next lower box, then I'm on the wrong side of the angels here, you know."
And I have data on all that with
Yeah.
especially these larger funds
Yeah.
and how they're synced to the indexes.
Yeah.
Like as long as that thing's in the bull market, like this works. Like it doesn't work very well in mid cap and small cap companies,
Right.
but something like Tesla,
Right.
you just gotta wait for that Jarvis box to break out.
Yeah. I mean, that's, I kind of love, what I love to see is on those. I like to see sell-offs that stabilize, that have a breakout, and then which stabilizes. And what I'm looking for is,
The range. Yep.
yeah, does it stabilize above the previous box? And if I can get me a little thing in here, that's what I like. With
Because
a
you have
nice,
a value. You have value now. Now you know
yeah,
what
I
discount
have,
and premium is.
yeah, there was a bunch of guys that were happy to buy it up in here, and they're not going to, if they're still holding it, they're not going to sell at least until it gets up to here. But if it ever breaks above here, there's a bunch of guys that are short who are going to hit their stops. And so you're going to get a short squeeze if it breaks above that.
Yep.
And so that's the piece I like to see. That's where,
The,
to me,
the
the
best results
150,
I have on
yeah,
the best results I have on these kind of companies, especially Tesla,
yeah,
is like the best time to identify the Darvis box is when it's doing. So you have weekly slowdowns, monthly slowdowns, and quarterly pullbacks, right?
yep,
That's outside of a bear market, right?
yep,
And like when you can identify that we just targeted 60-day lows, quarterly lows, on the Nasdaq, this is when you need to be jumping into Tesla and finding the lowest Darvis box possible because
yep,
that's the highest probability for risk reward, all that stuff.
yep, 100%. That's also that idea behind the compound critical state of the sniper, is that
Yes,
I like the
yes.
10-day box, because a lot of times that's the intraday guys, that's what they can see. So look back 10.
Because that critical compound critical state that happens intraday, like let's take the Nasdaq, is between 45 minutes to hour 30.
Yeah.
That's when you get your daily range. It still
Yep.
happens on these companies, but longer term, like you were saying,
Right.
5 days
Yep.
produces 40 days of the range, you know. That's why they can see it a little bit easier. But like, wow, this is fantastic.
Yeah, that's why I like looking at the 150, the 30, and the not drawn to scale. But these guys, 30 week, that's a long-term buy and holder, really. And if that thing's down near its 150-day low,
That's
and
when
it's near,
pension
and it's
funds
at
and
the
insurance companies starts buying it up.
yeah, and the 30-day low and the 10-day low, which you end up, and then if it had 5 days of quietude, and it's all sitting right down here on the low, we call that the catfish. It's like, dude, everybody that was gonna sell sold, and it's had 5 days of nothing. That's either gonna new selling, and that means all of these guys are experiencing psychic distress because now there's a breakout to the downside.
At some point, I need to look up this data, but I just did 2 years ago. I did this huge data pool on the exactly what you're saying and the probabilities of breakouts after the 20 versus failures. I did it from a mid cap, small cap company, but it proves everything from a data perspective, what you just said.
Yeah. So this is the main idea here, that if I can get oversold on a 150, it's in the bottom 10%, and oversold on a 30, and an oversold on a 10, and it was a 5-day quiet, I'll just bracket the shit out of that. Whichever way it goes, it's going large. And the first day is going to lead to a second and a third day. Now, sometimes it'll be that first day will be such a big move that now the 5-day volatility box is large, and that's fine. So what all I'm looking for is, I look at the 5-day volatilities of the last 30, actually the last 150 5 days percentages. And there was some the maximum 5-day range, the minimum 5-day range, the average, and then plus or minus one standard deviation. So that's going to be normal. And that's about 2/3 of the time the data is in that range. About 1/6 of the time it's abnormally volatile, and 1/6 of the time it's abnormally quiet. And it's out of the abnormalities that you're either going to get a big follow through or a big reversal or a big breakdown or a big reversal. It's out of these abnormal start conditions you get the abnormal results. So when you combine location, which is where it is in its look back periods, abnormal location plus abnormal volatility, you're getting the compound critical state. And that's where the genuine explosions occur. All right, Kyun, back to you.
Yeah, okay. I'm just looking at this, for example. That's what I was saying. So up here,
Perfect.
we're talking about keep
Perfect.
percentage, right? That might be slightly premature, but that had already run 2 hour and
Yeah.
it's kind of stalling.
Keep
And I said,
two.
well, I don't
Aim
want to
for
think
three,
too
keep
much.
two.
Yeah, I don't want to think too much. It might come all the way back, and then so I just took it.
Yeah.
I mean, my rationale is that if it runs again, the higher you take the exit, the lower your risk on the next trade.
Yes, sir.
If I give it back all the way here, then I've already lost,
Yeah.
that much, and then I'm risking again that much, and I could end up being a net loser. So
Yeah.
that's one of my problem.
Yeah.
So taking it kind of early is nice for me. I guess my next thought would be,
Yeah.
well, if
Watch
it's
what
not,
you actually took it at the halfway point in that new box.
yeah, yeah,
Here's why that watch what happens
yeah.
when you have if
That,
you
that
use
this
your
is
rule of
yeah, this is
four,
the framing. Yeah, yeah,
if you use your rule of four
yeah,
and it's sold off and now so you buy it, when it gets to +1 on the way up, you're holding one.
yeah,
Uh your stop, which was here, should be there.
yeah.
No
Totally.
lose
That's
plus
right.
dinner for two.
Yeah, yeah.
Now, watch what you want it to do is you want it to get to +2,
Hmm.
right? Because at +2, you can decide, well, I'll just go to 1 or 1.5. Watch what happens if you use 1.5. If it got to +2 and peaked and then starts rolling over and you exited it at 1.5, you gave back a half, right? From
Mm-hmm.
2 to 1.5, you gave back 1/2, but you kept 1.5, which is you kept 3.
Yeah.
3 times 1/2. So that feels really smart to me. You would love that it would just blast right through 2 and get to 3, and then it comes back and you keep half of that one, right? Now you kept 5 halves and gave back a half. But it's as you start, especially on the long side trades, you see these things, they panic sell and then they grind their way up, you know, and you got to lock in pieces on the way up to me, you know. You got to take
Yeah.
those partials. So that rule of 4 allows you to see that very, very clearly from a psychological lens, and you don't have to worry as much about, well, what was the color of the bar, and did the
Yeah.
bar make a new high, and this fucking all that shit.
Yeah, for sure.
As
For
soon as
sure.
the RL look, when the RL10 peaks, it's done. It really
Yep.
is, because price was moving up well, and the RL10 was going with it very nicely. The RL10 wants to keep going on that slope, but instead, price started doing this crap. It started going sideways and it
Yeah.
started stalling. That's enough to make the RL10 peak right here before the big collapse. But if there was a big collapse, the fact that you had measured you were going to keep 75% of it. It protects you against the sudden collapse, right? Which is what you get after a big sell off and it grinds north, and now suddenly all the buying disappears. It drops like a stone. So that's why you want to have the psychological stop of 70% or 75%. So when you get that one adverse bar, it takes you out before you even realize it. And now you don't even have to think. You kept 75% of a good trade. Remember, this trade was against the grain. This trade was against the primary direction.
Yeah.
So you want to be quicker to get out of that one. So that idea of 70 or 75% is ruthless. And you'll be happy that you did. All
Yeah,
right,
now,
yeah.
oh, sorry, am I
Keep
still,
going.
okay, yeah, that's cool. I guess my other problem, which I'm not sure I have, no, it's not here. I don't want to jump all over the place. This is always a problem one there. Okay, I guess my problem, I think either Chi-Wing showed it or it's like when this, if I took that and this runs again, well, actually it doesn't run. It spikes, the price spikes up above
Yeah,
that top and always tricks you, like this one. It's just,
right.
oh, it's
And
gonna
remember,
run.
it's against the grain.
Yeah. And I didn't take it this time, but it always gets me and I lose it,
Just take a break. Hey, you scored 2 out of 3 wins. You're up
yeah,
2.
yeah.
Go get a cup of coffee.
Yeah, that's what I did. I said
And
I
this
should
is and this is
stop.
the end of the, this is,
Yeah.
look at all the RL, the Z3 lines are pinching. This is where you expect after the first 90 minutes. This is where the grind occurs.
Yeah.
It's even less follow through.
Yeah, exactly.
You
And then I was
more want to take the short than you do the second condition long, to be honest. You want
yeah,
like,
and I didn't show the VWAP here. That's the other thing
yeah.
I would have here to tell me,
Yeah.
I think this day was all below the
Yeah,
VWAP anyway.
this is all, yeah, and this is all, look how these big moves are what create the responses. Big
Yeah,
fail, big response, and now it's grinding. It
yeah,
really is. Yeah,
yeah,
could you squeeze out some trades in here? Yeah, you could. But the big move is happening in that first 2 hours.
yeah, totally. Okay, let me see what I've got here, if there's anything. So stuff like that is where it knocks me out because so this is the open here and open right here, ran back up and then ran back down, pizza flipped, and I say,
We
okay, the
got to
pizza
work on
flipped.
this because that is a screaming collapsing dragon.
I know. So I
Because
took the profit
you're
here.
below all of this.
Hold off.
That is, and that's the high of the
Mhm.
day. And there's a range stat move to the downside.
Yeah,
You just got to hold your nose and eat it.
I know. But you see, so I put my stop here at the pizza dot, and that got taken out, and then it ran all the way back, and I
You just
was
take it again. You say, all right, you get me twice.
yeah, just gotta do it. Hold my nose.
You got
Yeah,
to get used, you got to be a
yeah,
rhinoceros, man. Thick
yeah,
skin. You got to take
yeah.
that trade. Now,
So
on the
yeah,
positive side, your recovery trade on that is beautiful. And
yeah,
that's
that was rule of four all
and
day
that's
long.
a perfect rule of 4. So, all
Yeah,
right, so you didn't take this one. What's the
yeah,
harm?
yeah,
Just remember that the market is an eternal. That little, I forget what the name of that thing is. The little thing on the kids' playground. Not a merry-go-round, kind of like it, just the spinner. It
carousel.
Yeah, yeah, kind of like that. It doesn't remember the trades you didn't take. It's
Yeah.
trying to give you this. It says, "Come on, take this trade," and you don't take it. It doesn't remember that
Hmm.
and try to get revenge on you. It's just this eternal merry-go-round, and there's an infinite number of opportunities coming, and all you got to do is decide when you are in time, will, pattern, money, and the
Yeah.
will must be there. There's an infinite number of opportunities coming, and it doesn't remember which gifts you rejected or didn't
Sure.
take. There's an abundance. There's more trades than we can even imagine.
Yep.
So
That and just share one other thing that I did was I did a data thing on Tesla gaps
Yeah.
for the last 30 days and because I wanted to know just for my own information how big was the gap. So
Yeah.
so I did 30 days and 60 days. And you probably have done this already, but anyway. So the average absolute gap was 6. So I know that now. So I know that in my mind what it was. The gap up average was just less than 6 and the down gap was about 8.
Yeah.
So that tells me something, and something else tells me something. And when it gaps up, it closed up on the day 15 times, and then well 68% and 32% on the days that it gapped up. On the days that it gapped down, most of the time it stayed 80,
Yeah.
90% of it was down.
It
And
gaps in
that's
the
kind of
direction of
interesting
the
to me. So
close.
now I
Yeah.
know when the gap is going one way or the other, what does it
Yeah. Now that can be true about Tesla, but what I'll also tell you is like with the S&P,
yeah,
those numbers change
of
on
course, yeah,
a weekly basis.
yeah,
So you see in my daily report,
yeah,
I don't talk about it that much, but sometime 2 weeks from now, those numbers could be absolutely reversed.
yeah,
And so you got to be, there's no exact one, always fade the gap. No, not always. That's not always the sensible play. I mean, I
yeah,
always look at it this way that there was the close. Here's the gap open. I always treat that, well, that's my first leg down. How many R10 boxes is that? So if it gaps up and starts going, I can get long, but then if it fails, now I know if that's a stop and reverse or if it's just a stop. And if it gaps up and keeps going and I get in, all I got to do is get my stop to no lose plus enter for 2, and then I'll just manage the trade from now on. It's just straightforward.
Yeah.
But yeah, if you look at the daily report on the S&P, that actually changes.
Is it on a day on a weekly basis?
It changes more on the liquid day trading symbols like SPY and IWM and the Qs, because there's guys on both sides of the trade a lot. But when you start seeing symbols where there is a strong directional bias, then you can get these kind of skewed numbers. And Tesla feels like one of those, especially after a long period, where it was in a range and now suddenly big gap up. I'm always long that shit. Always. Because something just happened. And then that's like a new sheriff in town. Playing it from there. All right, what else you got, Kim?
That's all. Thanks very much.
Okay, sir.
Yeah.
All right, I got us at a little bit past 2 hours, so that's a pretty good day at work. Matt, well, I'd like to. I'm going to invite you to. You can join the other sessions too, because you're probably more active trader than these guys maybe. I would say the Wednesday call if that fits your timeline.
That definitely does.
Because those guys are early, and I think it's important you talk with Eric and Mark Holland, and is in there a lot too, and they're pretty active traders. So if that works for you, you're free to attend as many as you want to if you want. So
okay,
find your own.
Awesome.
Yeah.
The biggest thing with me is like I don't speak y'all's language.
Yeah.
Like I know all these
that's why
my
you'll start picking this up as you go.
Yeah.
And then you can start figuring out how to start communicating back to us.
When I built all of my statistics in my trade models, right? So you said time, will, opportunity, and money.
Yeah.
I've mastered 3 of those. I'm lacking 1 of those, and you can imagine which one that is.
Well, I would say time, will, pattern, and money.
And money.
Yeah.
So when I built my statistical stuff, it was all off of something.
Well, when I say
objective.
When I say money, that just means that we have trading capital available in the account to deploy.
Yeah.
Not what is the overall liquidity of the instrument, because we're only trading things that are very liquid, so that we can hide in the weeds. Yeah.
So right now, like all my measurements are off of time because time is the never changing function of
Yep.
price and time, right? It's
Yep.
not off of an indicator or anything. So like I can show you every MFE, every MAE of every single time range out there
Yep.
on the NQ.
Yep.
So like that's what I mean by I don't speak the same language.
Yeah.
But I'm excited to sit here and listen to y'all and see how I can take my statistics and apply it and help you guys out and vice versa. And then the one thing I am lacking, which I've been very transparent about, is that trading capital. Right now, because of the transition and everything, we're just going through savings. We're saving, paying off interest
Right.
items. And like, so right now what I'm doing is one of these sim account prop accounts, and I'm tracking my trades and mastering the
So
performance of
the
my
guy
trade
I want you
models.
to, I'm going to send you an introduction to Konstantin Pabst. He's a Euro guy, and he's trading about a $2 million prop account, basically using our SSC and COTA 2. And he trades the gold dollar pair futures and sometimes the gold euro. And he's been able to get really good
He
statistics.
trades the Nasdaq quite a bit, yeah.
Yeah,
I've seen him trade.
also doing that too. You'll see him in the campfire chat room if you search for Constantine. And that's a way to acquire capital. That to acquire that capital, you got to show disciplined results, which you can do, and we can build on that. As Hamad has experience with that.
So do I need to start pulling data for gold, or is that one of those things?
I would
like
add, I would add in if you can do the gold dollar pair, I would add that because the gold dollar futures trades a little more smoothly than the gold contract itself.
Oh, really?
Yeah.
I'll have my data guy pull that thing because I have data guy and coders and stuff like that help me out with stuff.
Yeah. The other things, the Aussie dollar, US dollar, and the New Zealand US dollar also are pretty liquid and reliable traders too. So if you can pull those pairs,
and then one thing I'll owe you guys, because I'm serious, like I spent 3 years doing the little equity trading data, all that stuff, and I've done literally a very deep dive of every single breakout and what the criteria, how long it lasted, every measured move, all that stuff. So I'll go find all that, collect it, and then I'll make YouTube videos and see if it helps you guys.
Yeah, I'd like you to think of this just as, you saw before I had that little true storytelling circle in the roundabout. What these sessions really represent is a bunch of 19 deltas reporting back to the base camp. And as we build our common language, we can start what is going to help influence 10 or 15 guys and what they know.
See, you already get me. You already know, like, I think Intel, and full data.
Intel drives the whole planning process. I'm an Army logistician, but before I was a logistician, I started off as a truck driver. Then I was went to infantry. I was an airborne ranger, and I was in 3rd Bat for 3 years with McChrystal and that gang. And
I know McChrystal.
Yeah, he's not bad. He's pretty smart guy.
I actually served with him in 3rd ACR.
I was a platoon leader for him for 2 years and his company XO for 18 months. Back when he was Captain Stan.
Holy cow.
I actually talked to him.
I only knew him when he was colonel and above.
I talked to him last week. We were on LinkedIn. He was at the 3rd Bat reunion, and I hadn't talked to him in 15 years, but we were the Air Force fires officer was there, Eddie Reinford, Rhino, and he was on. He saw me. He said, "Hey, Stan's here." So we ended up talking for about an hour about old times, and it was like I hadn't talked to him in 15 years, and it was like yesterday. That's, as you know, that's just the way it is. But yeah, he's quite a guy. All right, fellas, that's everything we got for today. What I'll do is I'll get this published and processed and hung in the course under the cohort. You have 3 under the cohort 3 by today's date. And we'll get this squared away. I'm going to actually, for your own edification and use, start using Notebook LM from Google. Go to Google and just type Notebook LM into the search box. They give you a free version. I'm going to buy the business version of it to get more capacity. But boy, it'll take this 2 hours, and it'll produce an FAQ. It'll produce a glossary. It'll give you a timeline, an executive summary.
It'll make a podcast for you out of that.
A 10-minute automatic podcast. It's fucking crazy.
Yeah.
And it won't use the bad language that I was using. So,
There's a couple of things like Note GPT that will take this. And there's all kinds of stuff. But I'm fond of Notebook LM. I think they're doing they're going to put a lot of money into that. And they have the money to put into it, unlike these other startup AI.
Well, they have to. They're competing for their life against Elon and XAI. I mean, he's building the data center.
He just built. I can't even. Some of this I can't speak of because it's proprietary and I'm regulated. But just keep an eye on Elon's Gronk. It's crazy what he's doing.
Yeah, he's building a data center in Texas with 1 million NVIDIA GPUs. And they just came out with that new 5 series.
Yep.
That 5070 is that GPU is at $550 price point, and it has as much power as the 4090X. I mean, holy shit.
He bought so many of them that he put backlog for. Yeah, he backlogged that system so bad.
And the beauty of it is the way he thinks at scale. He says, I'm going to buy them all because at some point I will find a use for them. But if I've got them, they won't have them.
Well, listen, NVIDIA is already front running their next product, and they're just going to they're going to patent. They're going to do things with the one that Elon built, so that comes off market and is given to him.
Right.
And they're going to they're remaking a consumer version of it. It's crazy what they're doing.
Yeah, he's don't bet against Elon. If you think about Elon Musk, I do a lot.
Yeah.
He's got solar energy. He's got battery storage. He's got AI for vehicles. He's got the robotic gigaplant. He's got SpaceX. He's got Mars, and he's going to have he's going to get the cyber body brain so that he lives forever. And he's got his sights set on there is a asteroid in the asteroid belt that has rare earth minerals on it that is valued at $100 quadrillion worth of rare earth metals that are needed for batteries and electronics. So
he's guaranteeing that the dollar does not collapse and it stays the dominant currency.
Yeah.
Because he's on Team USA.
He's on board, man. And
what he's going to do with the Department of Defense once we get him
NVIDIA and Palantir. NVIDIA and Palantir.
Yep.
And you wouldn't be dumb to buy a little Bitcoin.
Yeah. Nope. You sure wouldn't. Hey, I could talk about Elon all day long.
Yeah.
That dude's fascinating.
My brother-in-law was employee number 18 at SpaceX. He just retired from out of there, but so yeah, we got a lot of Elon stories there. All right, you guys take good care. We'll get this published in process, and we'll see you on down the road soon.
All right.
Take good care, guys.
Yes.
Take good care.
See you later.
Okay.
Bye.
Bye.